Hello everybody, welcome to another update on the stock screener. I got a list of fertilizer stocks and I'm going to go through all of them in a speed run. So let's start with the first one, 5EA. I have no idea what these companies are. So this is on the Australia Stock Exchange, went up 1.4 billion AUD. Is about $1 billion of market cap, and it has lithium and borates. I have no idea why this is in the list because this is not a fertilizer stock. Let's see. Always go to the presentations. This looks more like a battery company. Boron. Never heard about boron. So this is a sector that I don't know anything about. That's a problem. Okay, they give some numbers. Apparently, boron also is used in fertilizers, for super fertilizers. Magnets, coatings, apparently a pretty interesting material. Is a critical material. And there's a supply gap. So demand is now at 4,000 kilotons. And in 10 years, it will double. And in 30 years, it will tenfold. Very interesting. And in 10 years, we only have that much of supply increase. And there's a supply gap. Okay, interesting. It's in America. And they need probably 2 years to get to production. They already have a resource. And some sort of extraction process. Initial production is for this year. But they will probably expand. And they think that they will get a PE of 20. Still don't have any numbers on production and costs. So that's something that we need to find ourselves. 400,000 tons. Okay. But at what cost and at what capex? I don't have anything on that. So that's not good. No feasibility studies, just a new company started in March. I'm not too convinced about this. So it's a no-go for this one. Let's go to the next one. Highfield Resources. Also on the Australian stock exchange, probably around 350 million US dollars. Is a potash mine in Spain. We know Spain has a very high energy costs, so that's one problem. Okay, in Spain, Pamplona. Okay, so let's take a look. They are constructing the next potash mine. We know that potash will go up. That's good. So we don't need to look at this. It's called the Muga project. Two-phase. 1 million tons per annum. That's not that much. And it's already at a market cap of 300. And it's not even built yet. $1 million, is it? Will produce 1 million in two phases. So I already know that this is overvalued. So from Spain, nothing on costs. Capex 400 plus 200 million. 400 plus 200 million is 600 million for only 1 million of potash. Do you know Verde can already go to that 1 million times 6 is 6 million. 6 million in glauconite with a capex of only 30 million. And here they use 600 million. So I think Verde is multiples better than this one. We have a lot of capex. What's the NPV? $2 billion NPV. At which price? They don't say it. Then we need to guess. No numbers here. At current spot price. What is the spot price? Can't they just say it? 2 billion And what's the cost? No costs. 30-year mine life. Verde also has 30-year mine life and much higher production. Much lower capex as well. Where are the costs? 76 euro per ton. 76 euro per ton. That's extremely cheap. Yeah, that's very cheap. I don't believe these numbers. Normal producers have a cost of 250 to $300 per ton, and this one is below 100. Okay, we can do the calculation. So let's say they get to 1 million tons per annum times $1,300 of potash. Let's say 1,200 minus their costs are about 100 times 5 in millions, so it's 5 billion, worth $5 billion right now. Problem is I don't see the potash price. Oh, here. They use potash price of 440, which is $500 per ton. Okay. So this is actually a very good project. Worth 5 billion, and market cap is only 350 million. Also, let's say they do some dilution, then it gets to 1 billion. So then there is upside of maybe a double to get to 5 billion. So this is actually a very good project. The only problem I see is they only have a market cap of 300 million. So where are they going to get 600 million? That's the problem here. We don't know if they can finance this project. That's the only problem here. Construction should start. Do they have enough money for that? I don't know. Let's see. Project financing agreed. They have a financing package of 300 million, which is enough for the first phase. The first phase was 400 million, and they have 300 million. Okay, so they are almost financed. It's a low-cost project. So in the first phase, they would probably do only 500,000 instead of 1 million. So the value should be around 2 billion. And they have a lot of debt financing now. And when are they going to production? 2024, at the end of 2024. So you need to wait more than 2 years to get to construction and production. Verde is already in production. And by 2024, they will probably already have 20-folded production. So this is a good project, has a double, but is not built yet. Okay. So there's a lot of things that can go wrong here. And they also have a lot of debt. Verde doesn't have any debt. So you can buy this, but it's not an immediate return. You don't get an immediate return because it still needs to get built. Next one, that's Verde. Then Chatham Rock. Phosphate went up 18%. Looks like an exploration company. Market cap is only 20 million. New Zealand. Always go to the presentation first. So this is phosphate. You have nitrogen for the health, phosphate for the growth, photosynthesis, and potash for the yield. And this is the phosphate. $250,000 tons per annum production commencing this year. But then we have the Makatea and we have the Corella. So not sure what these all are. And the fourth step. No idea what they are doing right now. So this presentation is really confusing. $20-year permit. So this is an example of a really bad presentation. A lot of text, too much information. I'm getting dizzy by looking at this. And that's the budget, apparently. I can't read this. Can you read this? I can't even read the legend. Market cap compared with funds raised. I don't even want to keep on reading this. This is too much confusing information, giving us numbers. So they are saying that they will get an annual gross margin of 200 million. That is pretty high for a 20 million market cap company. Not sure how they're going to do this. Net profit of 200 million or 100 million USD. Pretty low cost compared to revenue. $200 million profit, and then some income tax gives us above 100 million. And it's in the sea. Also, they're dredging phosphate from the sea. A very weird company. Some more mergers. Okay, so I have no idea about this. This is really too complicated. I don't even have capex numbers, no timelines. Some numbers that pop up. And we're looking at 2027. So it's a long time from that. So yeah, looks like a no-go for me. Next one, Intrepid Potash. We already know about this one. This has a PE of around 7 and is highly correlated to potash prices. So it's a good value. But it's also high cost. That's one of the high cost potash producers. So yeah, this is a perfect play to play the potash price. But there's probably not a lot of growth. Do we have growth in this company? I don't think so. They haven't even updated their presentations for this year. So there's nothing to see here. Let's look at the 2018 presentation. So that's the production. Do we have production numbers? So the mine life is pretty high. That's good. But looking at these numbers, I don't see that the sales are actually rising. So tons sold, 800. So it's always around 700, 800. So I don't think that this has any growth. So that's not interesting. Next one is Agrimin, also in Australia. 100 million market cap. Not a lot of cash. Potash producer of sulfate at $500. They own 100% of the Australian mine. Shovel ready this year. 1 billion NPV. It's probably 200 billion right now at these potash prices. $160 per ton. That's higher than the other one, but still very low. And 450,000 tons per annum. Okay, let's do some numbers. 450 times minus, let's say 200. Then we have 2.5 billion. Okay, that's correct, 2.5 billion, and market cap is really cheap. The thing is, are they in construction yet or not? Forty-year mine life. That's good. Good EBITDA margin. And what's the capex? Large mine life is good. Still don't have any capex or timelines. Because they still need to do a feed study, approvals to be done. Feasibility study to be done, and then construction of 2.5 years. So we are talking about, let's say, 2025. That's too long for me. I don't have time to wait until 2025. But it's good to know that there is a potash project coming on without any capex. So probably they don't want to tell us the capex because it will be pretty high. Oh, here it is. Pre-production capex is 640 million. 640 million is $500 million. They cannot finance that with this $100 million market cap. So that's the highest risk here. Can they finance this? It's a good project, but there are no investors right now. We need to take the high ground and not wait for investors to come in. So this is a no-go. Next one, CI Resources. Another Australian one, around 100 million market cap. This is a red flag already. November 2017. Where are the other presentations? This is not even a presentation. So they have acquired some Singapore-based joint venture, 60% for 3 million. No idea what this is. So it's somewhere in Singapore, Malaysia. They do have revenue. $200 million revenue. Okay. Net profit is very low. So that's not good. How can they have 200 million revenue with only 6 million profit? That's not a high margin business. Earnings per share 5.8, so 6. That's in cents. So it's worth about $6. Okay, that looks cheap. For the half year. Okay, so these cost of sales are really high. Net profit is 6 million for the half year, so 12 million for the year. That's a PE of 10 then. I don't like to buy businesses with low margin. Equity is 200. 200 million. So it's pretty cheap. It's below equity. Probably because investors don't like to buy high cost companies. So this one looks fishy to me. It's in the phosphate business. Yeah, it looks cheap, but low margin, so I will not be looking at this one. Reward Minerals. Again, in Australia, where I can't buy any shares. 20 million. Market cap. Share price isn't doing anything. Is a potash project. So they use the brine technique. Cash cost is pretty high, 260. And that's cash cost. We also have all-in sustaining costs, so this is probably a very high cost mine. Very high cost. 400 ASIC, 400 million in pre-production. So it's a no-go, obviously. EBITDA margins are lower than Verde. So again, this has potential with these NPVs, but the problem is, can they get it in production? Because it's a high capex project, 400 million, and we don't know when it's going to get built. Still developing it, probably takes 5 years to build and to put it in production. Capital costs too high. We do not have the high ground here. Next one. Fosco. Another one in Australia, which I can't buy. 30 million is rising. Another phosphate project. So they are doing the feasibility study. It's in Tunisia. They have no cash. Open pit mine. About 100 meters overburden. Still need to do PFS, BFS, construction, production. And no numbers at all. So yeah, I can't do anything with this company. Next one. Grow, CO2 grow. $15 million market cap. This looks like an agriculture company. not really a fertilizer company. I have no idea what this company is doing. Oh, they built the CO2 infusion system. To increase the yield. Yeah, the problem is today these greenhouse uh, production facilities are all going bankrupt due to high energy costs. So not sure if this has any future. And the share price is also not doing very well. Do they even have earnings? Let's look at the financials. Annual statements. It's really difficult to find their earnings, so they probably try to hide it somewhere. Okay, let's look at Cedar. You can't escape my Cedar documentation. I will find you. Equity is 1 million and it's at 17 times that value. And revenues 100,000, 70,000 profit, losses. It's a good margin business, but they have a lot of costs here and they are not profitable yet. So, yep, no go for me. They don't have earnings. Next one. UAN. Yeah, this is one that produces UAN, which is, I think, ammonium nitrate. Yeah, ammonium nitrate. So this is easy. You just look at the earnings, 60 million. So that's about, let's say, 300 million now. So that's a PE of 5, 6. So the problem with this company is probably that natural gas will be rising, so the costs will be rising. And that will decrease the margins. EBITDA margins around 20%. So these margins could decrease with the higher natural gas price, but UAN is also rising in price. It's not a bad company. Adjusted EBITDA. Yeah, that's only the first quarter. Assets 1 billion, 300 million equity. So it's overvalued in book value. Sales, it's not that high in margin, so the margins are low. They have a net income of 80 million for the year, which corresponds with this 80 million. But now we are having much higher revenue, so yeah, it's about 300 million. PE of 5. It is good value. I think there is upside, 50% upside, if the price of UAN keeps rising, of course. But the question is, do they have growth? That I don't know. Do they have production numbers? Yeah, here we have the production of UAN. It's pretty stable. So I don't see any growth. So you're dependent on the price of UAN and ammonia and the cost of natural gas, which I think will be rising. So basically, this is just buying UAN. There's no upside in growth. And I always buy companies with growth. So next one, Keras Resources. London Exchange. $7 million, small cap, and has a phosphate project. And manganese. Phosphate and manganese. Probably doesn't have any production yet, not knowing when to start. So this is pretty high risk. No, this is a no-go for me. And you can see that share price isn't doing that well. Ariane Phosphate, I already know about this. This was a no-go for me because it's overvalued. And I will tell you why it's overvalued. $120 million. Okay, so 26 years. A lot of resources, okay. This is a problem. Initial capex, 1.2 billion. 1.2 billion. They are never going to finance that 1.2 billion with market cap of only 100 million. So that's the first problem. Construction ready, but no financing in place. Maybe they can get a buyout somehow, but again, we do not have the high ground here. You're dependent on financing and investors, which could come or not come. So that's the problem with this one. It doesn't have the control. Verde Resources. Another one from Australia. 20 million market cap. Looks like it's going bankrupt. And it's phosphate. In Brazil. Production by Q4. Okay. We are already in Q4. 18 years is good. Capex 7 million is very okay. 3 years of ramp up. NPV of 70 million is also good. But are they already in production or not? Is there any cost? 72 per ton. What's the phosphate price per ton right now? 120. I think it's already 1,200, something like that. So I have no idea what they are selling here. Let's not look at the copper project yet. I want to know the production of. See, this is from 2025, so a long way to go. Still don't know if they are in production or not. DANF. What the hell is DANF? Diammonium direct application natural fertilizer. Okay, let's look at the news. Are they in production or not? Apparently not, because they haven't announced it. 3 million loan to fund the construction. And since June, we haven't heard anything. So they produce natural phosphate fertilizer. $3 million has been funded. So where's the other 3 million? I like the 70 million Australian on 18 years. So you need to divide it by 4. So that's about 20 million current value. So that's not a lot. I'm not sure this is undervalued. I think this one is fair value. So I don't think there is a lot of upside in this one. And we also don't know if it's in production yet. So no, next one. LSB Industries. 2 billion market cap. Is already in production. PE of 6. 160 million. So let's take a look at the earnings. Latest results. Equity 460 million. So that's overvalued. $1 billion assets, so a lot of liabilities as well. Net sales, a lot of cost of sales, low margin, net loss, so it's a low margin business. But of course, the price of fertilizer has gone up. And it's nitrogen. So this is probably the same as the other CVR and CF Industries. They just produce nitrogen and is dependent on the natural gas price. If the natural gas price goes up, then the costs go up, and they produce nitrogen fertilizers. So it all depends here on the valuation. Ammonia at 1000. Yep. Fourth quarter, we have 190. Gross profit, 50% gross profit, very good. 40% EBITDA, 50% adjusted EBITDA, and earnings per share is 0.7 times 4 is 2.8, let's say 3. So it's at a PE of 7. Okay, that's fair value, but I wouldn't buy this. It doesn't have any growth, and it depends on the nitrogen price and the cost of natural gas, which are going to go up. So this is not a buy for me. Then we have Fertiles, the last one from Australia. $40 million market cap. Phosphate. I don't know what they are doing. There's no production or anything. Drones. I see drones. I see carbon trends. I have no idea what they're doing. Let's look at the earnings. cash flow of 1 to 2 million Australian, and losses. So this company doesn't have any earnings, losses. So I wouldn't buy this one. Okay, so that concludes our list. And Verde Agritech is the only one that's actually good. Highfield is interesting, but it needs to be constructed, and that's the risk. This is a good one, Intrepid Potash, to play the potash price, but it doesn't have any growth. And all the others are basically all exploration companies. Siva Partners is a good one to buy in UAN production. And that's it. I don't see any interesting company in this list except this one. And I'll see you in the next video. Bye.